Hello, 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 hello. Hi all and welcome to another edition of Midday Market Review by TraderCast. My name is Phil, I'll be your presenter today. Just checking that we have audio on and that everything else is working as it should. If you haven't seen this before, my name is Phil and I'll be your presenter today. A little bit about myself here, and if you're looking for a community of traders, check out TraderCast.com. If you're looking for the education, you'll find some of my courses on mytradingskills.com. Over the past 10 years, I had the privilege of talking in front of various different industry events, and I had the privilege of teaching some people how to trade. Some of them were brand new, some of them were experienced, and they needed help with a specific area of their trading activity. Big disclaimer here now, anything I say here should not be considered to be advice. Basically what I'm trying to do here is I'm just trying to show you a practical application of what I think beginners should be able to do, or maybe early stages intermediate traders should be able to do, and what we cover in some of our courses. Some of them are free, so feel free, check them out on mytradingskills.com. Okay, so let me just see if this is working okay. Okay, it is, yes, brilliant. Now, the last thing that I want to show you is, if you haven't seen this before, you know that we talk about live trades here. So this is what I've done since yesterday. Actually, this first trade, long crude, I was long at 88. This was open quite a few days ago now. One third was closed at 88.65, then a second third was closed at 89.30, and the last third was closed at 90.30. I'm looking to re-enter in crude oil. I was initially looking for take profit at 93, but that didn't happen, so I closed and I'm out of that trade. I was also short euro dollar at 114.28 before that consumer price index report came out, and I moved my stop loss at break even and I got stopped out, so I'm out of that trade as well. Yesterday I've managed to short S&P at 45.70, closed it at 44.70. Really happy with that trade. To be honest with you, I'm assessing US markets, equity markets right now, possibly for an oversold bounce back. I'll talk to you about a few of these levels on S&P shortly. I also have a new short euro dollar at 114.62. So this is live open trade. This was triggered after that rebound yesterday afternoon after the consumer price index inflation report triggered volatility in dollar index. So I've re-entered short euro dollar. So the first one was closed at break even. I'm short now, and I'm also long dollar Japanese yen at 115.94. So what I'll do is I'll show you those couple of trades, because euro dollar is making small profits. And I'll just tell you how I'm going to manage that position, and also dollar yen trade, it's open and that's making a loss at the moment, so that's where we are with those two trades. So this is euro dollar. What you're seeing here, this is a 15-minute time frame. What I'm going to do now is, from the longer term point of view, and I keep showing this chart over and over again, this is downtrending in my book. So we have a sequence of high, lower high, lower high, lower high, lower high. So this here looks to me like a fake out or possibly a false breakout, which is still creating a lower highs. And I'm bullish dollar because yesterday we got this inflation report, and that showed a much larger number than anticipated, which prompted most of the market analysts to consider a 0.5% rate hike in March by Federal Reserve, and if they do that, that'll cause a US dollar to strengthen even further. So therefore I'm bearish euro dollar. I'm bearish euro dollar because, oops, sorry, I don't know what happened there. Bearish euro dollar because I feel dollar strength is bearish for euro weakness. I would be looking to take profits lower, so there is a couple of levels where I could be looking for a partial profit taking. 113, it's a nice and round number. 112.70, so the cluster of these lows down here, and then ultimately down here towards 112.30. So a number of levels where I would like to take profit. I didn't take any partial profits at the moment. This is fairly small position. It's about $317 in profit now. But what I'm going to do right now is I'm going to move my stop from this swing high here. You can see the reversal. You can see where the price pushed higher and then created this shooting star candle. And we are seeing a bit of a follow through to the downside. So what I'm going to do is I'm going to do the same thing that I did yesterday. I'm going to move my stop loss at break even, and now if the price goes against me, hopefully I'll be able to react to this and get out of this trade before my stop loss is triggered. But if I'm busy doing other things, or if I'm away from my trading desk, or having a dinner, or having a glass of wine tonight, and I'm keeping this position open until the close, and if something happened, I'll be stopped out, and at least I'm feeling that I'll be stopped out with nothing. So therefore I feel that I'm not carrying much risk on this trade. So that's where I am. I would like to take partial profits, but my stop is at break even, and I'm going to leave it running for now. Just to show you the same thing here, that's euro dollar. This is a shorter term time frame euro dollar, and what I'm going to go and, sorry, I didn't mean to do this. What I'm going to go and do this is I'm going to show you this in an hourly oversold bounce back, and I'm looking for a loss of these lows at 113.80, possibly a retest from underneath for another leg lower, and that leg lower will be based on the fib retracement, and this gives me this shaded area here. So you can see from the swing low here all the way up to this current swing high, we are in this zone of 50 to possibly even 61.8 fib retracement. So if I'm confusing some of you with what I'm saying, this is now suitable for people who have been around for a while, or maybe they understand something about trading, and you understand some indicators that I'm using here as well. But I'm trying to keep this very simple, very simple here. So loss, a push lower, a daily close below 113.80 would likely, in my book, signal further bearishness, potentially opening the way for that push lower. And then if you remember, that's why I was looking at one spot 13 even number for potential partial profit taking, and then cluster of these lows at one spot 12.80 and so on. So this is that zone that I'm looking at the moment. Okay, now I'm going to leave this running for now, and just keep an eye on it, and if anything changes, or if I decide to do anything with my position, I will likely tell you throughout this session as well. Hey Caraldo, hi Robert, hi anybody else who is watching us. Let me just see, hopefully this is all coming through okay. It is. Yes, okay, that's good. Now the other thing that I was telling you about my dollar Japanese yen, and that dollar Japanese yen, unfortunately for me, didn't play out that well, and this is a losing trade for me. So let me just open it up and bring it across. I'm going with the same premise. So I feel that US dollar should be strengthening, and if that's the case, then I would like to buy dollar Japanese yen currency pair, because US dollar should be stronger, Japanese yen should be weaker, and that's where we are. Now this is the 4-hourly 4-hourly time frame. I have a really wide stop here because I feel that I was looking for a breakout above a previous swing high. And if you remember, we were looking at resistance here. We were looking at extension above 1.16, and I was looking for a possible breakout and a retest and a push higher. So I decided to go long. This is currently reversing. It's not doing that well. I'm currently making a loss on this trade here. My stop loss is quite wide, but I will likely readjust it and pay attention to it. What I'm really paying attention to is the existence of this trend line here. Okay, so if I see a push lower and a dip below 1.1560, 1.1550 in particular, and then a retest from underneath, that would definitely change my outlook, and I would likely stop myself out before 115 is reached. My view on the upside is towards 11650, 117, and even higher in dollar yen. But that's where I am with dollar yen. I'm keeping it open. It's a swing type position, and I'm gonna let it run and see how that works out. So let me just show you the same thing with dollar yen here. Dollar yen 4-hourly. If you remember, I was looking at the breakout, but then this is the trend line that I was telling you about. So there is this existing trend line here. This area is definitely of interest for me. Previous swing high, previous swing high, previous breakout. So I'm currently long. Okay, this is a losing trade, but I have a mental stop down here somewhere, because if I see a push lower and a dip below this area, then potentially a retest from underneath, so something like this developing. So something like this, loss and then retest, that could possibly open the way for another leg lower. So something like that is possible. Then I want to be out of my trade and rather than wait for a pullback all the way down to 115 and be stopped out. So I'll get out of this trade sooner than that. But that's where I am at the moment. I'm looking for a breakout, retest, and a push higher. This would be my preferred option. Rally, breakout, retest, and a push higher. Let me be precise in what I'm saying here with dollar Japanese yen. Okay, so now let me just put this away and tell you about a couple of opportunities that I'm actively looking at right now. One is in FTSE and the other one is in S&P, and then I'll talk to you about oil as well. I have a setup in oil. I have a pending order with that oil again. So first things first, let me just show you what's going on with FTSE at the moment. So this is UK 100 or FTSE. In my book, this is uptrending quite nicely. We are seeing a bit of a correction here and a loss of this rising trend line here. So what I'm paying attention to is I'm looking at this area down here to 75.85. What I would like to do is I would like to see if I get a pullback to that level and then a breakout to the upside from there. Okay, so that's what I would like to do. So I would like to buy at 75.85. My stop would be at 75.65, so about 20 points of risk, and then I would be looking for an extension to the upside towards 76.70, 76.80. So from the risk to reward ratio point of view, 20 points of risk for potentially 100 points of gain. So this is really good risk to reward ratio in my book. So 5-to-1 risk to reward ratio. I like those setups. I like the setups which are giving me a disproportionate amount of potential gain for much smaller and very much definite amount of risk taken. Why would I expect a pullback? Well, this looks like a loss of support and now retest. And what's happening at the moment is we are seeing something that potentially looks like an oversold bounce back, which is creating a rising wedge in an hourly time frame. This is a wick. And this type of patterns, they have the tendency to do something like this. They have the tendency to do this, a break below this rising trend line, have a little retest, and then people who tend to trade price action, they take the widest point of this consolidation and they extend that to the downside to give them the take profit. So anybody who's looking to short down here, if they are doing that, they would likely cover their shorts. They would close their shorts down here purely because this is symmetrical extension to the downside. So it's not exact science. There is always a bit of a variation of where the trend lines were drawn and how the candle completes, or where you get in, where you get filled, the price that your brokers are giving you. But that's a general direction. So this would be A, B, C down to this way. So if somebody is covering their shorts, they need to buy to close their trade. Therefore, I would like to get in here and look for the continuation to the upside. That's the basic premise of where I am with FTSE. Now, we have various different economic data releases next week, which could trigger a volatility in across sterling currency crosses. And if we see a volatility in sterling, that has a correlation to UK listed stocks, or in this case FTSE 100 index, which is an index that follows the movement of 100 companies listed on London Stock Exchange. Some of these companies are international companies. Although they are listed in London, they make revenues from various different regions of the world. So they're getting revenue in euros, revenue in dollars, and revenue in sterling, and then they report. So if sterling becomes volatile, if sterling weakens against these two other currencies, then that could potentially trigger an upward bias in UK or UK 100 or FTSE 100 index, because weaker sterling is perceived to be good for these international companies, which will show bigger profits in these other currencies as well. So that's the basic premise. And yet again, I have a tendency to try and explain a lot. I don't want this to become an educational session, but that's where we are. So that's the basic premise, and it's not just a technical, it's something that I'm paying a close attention to. I will be watching what's happening with sterling, dollar, and sterling euro exchange rate as well. But these are the levels for FTSE. Now let me show you where I am with S&P. We are fast approaching US Open, which is going to be now. US markets are opening. So from the S&P point of view, we had a massive corrective pullback yesterday. So this is, for those of you who traded before, you know this is a really heavy selling all day long yesterday. Higher inflation reading, more likelihood of Federal Reserve hiking rates. When they're hiking rates, that's considered to be monetary policy tightening. Hiking rates are not good for the stocks sell off, and so on. So this is basically what was happening. So now what I'm seeing here is I'm seeing this as an opportunity to potentially go long here. I didn't go long just yet. I want to see what happened in the first 60 minutes of the trading day. And what do you mean by that, Phil? Well, let me show you, and I don't want to confuse anybody with what I'm going to do right now. So this is where we are yesterday. So this is yesterday's trading range, and if you remember, I was looking for a similar thing yesterday. So what I wouldn't be surprised to see is a possible oversold rally in here for another leg lower, so something like that. That's option number one. So if I see a continuous rally after the open, and then I would see what's going to happen in this zone here, which is 45.37, 45.50 on the upside. And then if we see a big reversal there, possibly we could see a sell-off for the rest of the afternoon. The other thing that can happen is something like this. So we could see that today's candle, this trading range, is higher than where the yesterday's candle closed. So what US traders have tendency to do is they have the tendency to possibly push the price lower and test either the intraday lows or where the yesterday's candle closed as a level of interest. So this area here at 45.80 is the area of interest for me. So what I would like to do is I would possibly like to buy at 45.80, put my stop loss at 44.60 and look to take profit up here at 45.37, 45.50 on the upside. But that will possibly happen after the first 60 minutes of the trading. Today is Friday. This is the last trading day of this particular week. And if traders perceive to be more cautious going into the weekend, then we could see more volatility come in to the market in the just before the markets close, just before the equity markets close and people walk away for the weekend. From the price action point of view, this is a textbook bearish setup. It's called a rising wedge formation. And you've heard me talk about this before. It can morph into a flag as well. That's another bearish pattern. And the way this type of patterns play out, they have the tendency to do something like this. So they have the tendency to break to the downside and then have a little nibble here, like a little retest, and then another leg lower occurs. It's not happening just yet. This is early stages, but I'm encouraged with what I'm seeing here. So I would like to buy down here. Okay, that's what I would like to do. If I see a dip below this area and continuous selling pressure, loss of these lows from overnight lows, as they're called, and loss of 44.62, I would be happy to short sell again. So I would like to short sell below the lows or short sell the rally. That's what I would like to do. Okay, so that's the basic premise. I'm bearish. This kind of reversal would be more speculative and intraday trade in much shorter term time frame. So therefore, I'll be able to react to it. I'll watch what's happening in front of me. I will not walk away from the screen, and I will decide to take partial profits very quickly and move the stop loss at the appropriate level. So that's where I'm with S&P. Okay, we are just covering quite a bit now, and I've realized the time. So the last thing that I want to talk about very, very quickly is gold, and then I will show you where I am with my other two trades, and we'll take it from there. So gold, I have nothing open in gold. I'm looking at 1825, 1820 to the downside as a potential setup. If you remember from yesterday's session, I was looking for a pullback below towards 1815 for a rally higher and so on. Now this looks quite bullish, and it was confusing at first, because what happened is when that inflation reading came out yesterday, gold sold off and equities sold off. Nasdaq started selling off, Dow Jones started selling off, S&P started selling off, and dollar rallied. So we had a little bit of a pullback in euro dollar, we had a little bit of a pullback in sterling dollar, and so on. And then that was all reversed. So what I'm looking for at the moment is I'm looking for a pullback to 1824 and then a rally from there in gold. If that happens, I would likely be putting my stop maybe $5 below in price to 1820, with a view to potentially take profit towards 1841, 1850 on the upside. This is from a kind of a swing type point of view. From the intraday point of view, this price pattern appears to be very similar to what we saw in FTSE and also what we saw in S&P. This is a little oversold bounce back. Oversold bounce back. And based with the same premise, these type of patterns, they have the tendency to break to the downside. They have the tendency to do something like this. Break out of the zone and dip into this area. So that's the premise. That's the reason why previous resistance broken, support, 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 support. So horizontal support. I also have a reason for a little fib in here of 61.8, and I also have a reason for this fib from here to here of 61.8. So multiple fib clusters, multiple trend lines, and horizontals, all pointing to the same or similar area of interest, either as entry levels or take profit levels on the opposite side of the trade. So anybody who's short, this is where they would like to get out. Anybody long would be getting in where these short sellers are getting out, and so on. And that's where we are with gold. So 1824 is the level that I'm paying attention to at the moment, but I have nothing open in gold at the moment. We talked about I don't know if we talked about crude oil. Crude oil, this is where we are with crude oil. I am looking at this zone down here, 89. What I'm seeing here is this is from the trend point of view, clearly embedded uptrend. Greedy traders are more dominant here, and what greedy traders tend to do, they look for a pullback to buy, put the stop below, and look to take profits higher. Waiting for a pullback to buy, put the stop below, look to take profits higher. So that's where we are with greedy traders. We can call them hey, hi guys, I can see a few questions there. Hamid, always good to see you. And Shaji, hi. If you have any questions, let me know. I'll be more than happy to potentially answer them. This is where we are with the futures, WTI. This is the futures, so the price could be slightly different to what you have with your broker, but I'm looking for a corrective pullback here for another leg higher. If that pullback comes to 89.20, I would likely be looking to enter there with a stop at 88.60 to the downside, so about 60 points of risk for the potential extension to the upside towards 93, which was my ultimate take profit level from the previous trade that I had before, which was closed. The other alternative, which could be traded as well, it's a little bit more speculative, would be a breakout above here and then a retest. So breakout, retest for another gradual move higher and push into this zone here as well. This would also be tradable above 91, more speculative than a pullback, but both scenarios appear to be supporting the longer term trend, which is bullish. This is where we are, guys, with a few markets. We covered quite a lot today again. I have a couple of open positions. I'll tell you where I am with those. So this is what I had open yesterday. This was closed. That was WTI crude. My euro dollar was stopped at break even. If you remember, I moved the stop loss at the break even, so I got stopped out of that, but then I re-entered again at 14.62. I was short S&P, really happy with that trade. That's closed now. And then I'm also long dollar yen at 115.94, and that's a losing trade at the moment. So let me just finish today's session showing you those two, and and I'll show you where I am with the rest. So this is euro dollar. Euro dollar, I am currently short. You can see this shooting star formation here. I'm short. This is currently in the money. My stop loss was above, and I moved my stop loss at break even. So my stop is at break even now, and this is where my limit orders are. And if you've seen this from the beginning, you know that I'm looking at 113, nice and round number for a potential partial profit, 112.80, which is the swing lows here, and also that fib retracement, if you remember, and then all the way down towards 112.60, 112.40. It depends how far it goes. So that's where I'm with the euro dollar. Really happy. I have my limit order here just in the case if you see a flush lower, I want to be picked up there. That's a great level for profit taking. My losing trade is dollar yen, so let me show you where I am with dollar Japanese yen. I will reassess everything. Come on, sorry, this is better. For some reason, because I have 4 screens, when I'm peeling the chart from my trading platform, my mouse gets stuck always here. I don't know what it is. Maybe I'm just not doing it correctly, but that's where I am. So what I'm paying attention to here is this rising support trend line, and we are coming fairly close to it. My entry was here. I was looking for a breakout and a retest and a push higher. If I see a continuous selling pressure, US dollar weakness in a dollar yen currency pair, I will look to get out of this trade. I will manually close myself out with a loss before my stop loss is hit, because I don't want to give all this back. Basically, you know, it's a large stop, but I feel that longer term US dollar should appear to be more bullish going forward because of these economic data releases and because of the indication of what a Fed might do. That's where we are. So nothing else to report. Guys, no questions for now. Phil, I'm relating very well on all your notes. I hope. Thank you, Hamid. You are always welcome, buddy. Okay, so stay safe, happy trading, happy Fridays. And if I can suggest something, it's Friday, so make sure you take some money out of your trading account and treat yourself with something, whatever it is. Go and buy yourself a cake, cup of coffee, or a takeout meal, or maybe something bigger. Whatever it is, just do something. Take some money out of your trading account and treat yourself, because if you're doing that, you are conditioning yourself to do the right thing again. Basically, manage your risk, cut your losing trades quickly, let your winning trades run, wait for the markets to come to you before you enter, and if they don't, there'll always be another day. Okay, so stay safe, happy trading, enjoy your weekend. I will try and post the week ahead analysis over the weekend as well, if I have the chance. In the meantime, stay safe, happy trading, and bye for now. This was a long one. It was about 33 minutes. We covered quite a lot. Thank you for watching. Stay safe, happy trading. Bye for now.